Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 22nd, and take just a brief minute to discuss what markets did last week. And wow, was it an amazing week in the equity markets as the recovery from the lows in April continued, with the S&P 500 leading the pack up 5.27% on the week. The mid-cap index was still up a tremendous amount of 4.82% on the week. And the small caps as measured by the S&P 600 were up 4.1% on the week. And as fitting last week that we talked about the bond market, as that's been the talk on the market all week, as bond yields have increased, bonds have sold off over fears of government debt increasing and the overall cost of the debt of the United States of America. The other thing is, it's not also after a huge move like we saw last week. It's okay, we're only down slightly on the week, down just a little over 1%, couple percent here as we're talking around noon on the 22nd. And it's okay to have a little digestion period after that. We're also not getting a tremendous amount of corporate earnings right now. The earnings that we're getting still remain to be, for the most part, very good. Guidance remains strong. Earnings growth is projected for next quarter, which is all healthy signs for the stock market moving forward. And so the question that we have and we pose to ourselves is there room for this recovery to go? And if so, why do we think that? And we believe there may be some, as long as the bond market stays a little tame, and you're seeing that happen today. The highs for the week were 4.63 yield on the 10-year Treasury. We're now down in the 4.55s. We've fallen back down there. So it's allowing the market to be a little positive as we're talking right now. And that's been a little recovery, and we're going to tread here for a little bit. And as we move into the end of the quarter and the beginning of next quarter, you see more heightened volatility in the markets in general. We're also entering into the summer season. A couple of things here, some seasonal selling that you'll see happen. But during the last couple weeks of the quarter and the first couple weeks of the subsequent quarter, you don't have a lot of corporate earnings, so you see the market move very volatile, with a lot of volatility on macro headlines until we get those earnings numbers. But we expect earnings to hold up. We expect retail sales to hold up. And the reason we expect the economy to not dip into recession and continue to move forward and grow is because people are still employed. We are not seeing, as of yet, a crack in the employment in the U.S. For the month of April, we added jobs, over 100,000. We spoke about that last week. We got jobless claims this morning. While they were 227 versus 230 estimates, that's very normal. There's nothing that stands out there as abnormal. And so as long as the U.S. consumer is employed and making money, and inflation continues to work its way down. Now, we won't know the effects of the tariffs yet for some months, but inflation right now is around 2.3%, really close to that 2% target that the Fed's looking for. So there could even be the chance of a Fed rate cut. Expect the Fed to continue to issue debt to cover this, and they're going to do that on the short end of the curve. So the shorter bills, the 3, 6, 9 a year, 2-year bills that they'll send out to market to auction off to raise capital for the U.S. But we expect, as long as the U.S. consumer remains employed and has ability to spend money, that we will continue to move this economy forward. Also, do not forget about the advent of AI as it's starting to creep in and have more use cases, and productivity increases. And as productivity increases, inflation comes down and the economy can continue to grow. So as if you have questions about what to do in this time and how we're going to navigate this, just give us a call. We'd love to talk to you about it. We can reach us by phone at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.